Hello, everyone. Good evening, and welcome to this session. You know, of ICICI Direct Research YouTube live session on algorithm trading. And I'm Jay Thakkar. I'm heading the derivatives and quant research desk at ICICI Securities. And here today we are going to present it to you, the very new product which we have made it live on our platform, and that's with respect to the algorithm trading product. So thank you so much for joining today's session, and I will just share my screen for you to understand how to basically start this and what the product is all about. Before starting the same, I would like to provide an overview, or basically the reason why we have come out with this product, right? So friends, we have launched this product on our platform. The reason being is that we know that there are a lot of traders who are really interested in having this kind of a strategy. There was quite demand of it. And also, these days we know that the number of traders definitely have increased quite a lot as far as the index options trading is concerned. We are very well aware of the volumes that happens out there. The number of participants in the markets have increased quite a lot. And recently, friends, we all have seen since past couple of months that the volatility has also increased. And as per the regulators, paper as well, or maybe their research as well, we have come to know that many traders in the markets who are doing trading in derivatives, especially in the index options, we've seen that 90% of the traders are not making money. What could be the reasons of the same? What I understand from my experience and as per the data as provided by the regulator is that the last hour trading was enormous. I mean, people used to just buy out of the money options, trying to basically think that if there is a one directional move in their favor, it can help them to benefit out of it and making multiple kind of returns into it. Hence, buying options became very popular among the retail traders. And second reason is why people lost money is that, or maybe still losing it, is that traders basically buy out options which are far out of the money, which are cheap, uh, hence quite affordable, and hence they think of a large move, but then the move doesn't come, and the expiry just happened within the very specified or the defined range of 4 to 5% within a week, and the options basically end up in out of the money, and again the traders make losses. Third is the uh, nature of a human, which is quite general, uh, and it's is the greed and fear which you say. So out of the greed, people end up buying a lot of options, and they keep averaging the options, and they end up making losses because they go out of the money. So every day there is a theta decay in the options, which many of the traders are not aware of. They think it or treat it as a way of buying an equity, which they average it out and thinking that if at all market bounce backs, this will turn in the money or profitable. Then options do not bounce back that sharply. If then they end up making losses as the options turn out of the money. Then is over trading, which is again a continuation of averaging. So trading both the sides quite a many times, buying put, buying call, as and when the market moves, and that could also result in you know uh, erosion of the capital, as well as the indiscipline kind of a behavior, which generally many traders fall in the trap into. I mean, trading each and every time, which is again an extension of over trading, uh, trading each and every move, uh, However, for doing all of this, one has to be quite well equipped with the tools, with the data, and one has to analyze quite a lot before taking a position, whether it is any instrument that's traded in the market, whether it is options, futures, or maybe equity as well. Whether you're trading or investing, this is the foremost thing which is required, that is discipline. One has to know that when to enter as well as when to exit, whether it is a profit or a loss, not get carried away by the greed or the fear. Um, Also, a lot of hope trading that happens, that sometimes my rate will come and then doesn't come. One doesn't should or one should not also fall into a trap of over trading, indisciplined trading. So these are the things which are required from the behavioral point of view, apart from the very well research, okay, which is also very much important as far as taking position into any instrument. And options are very popular because uh, they're quite liquid. The participation is quite a lot, so the entry and exit becomes very easy. So yes, that's the advantage of it. You still have the weekly options available for the benchmark indices like Nifty and Sensex, and so the liquidity is enormous out there still, despite the volumes having on half overall in the market in the FNO segment. But the opportunities are still there, right? So, friends, uh, we have designed, created this product keeping in mind that many traders who do not have time to monitor their positions, they miss out on the exit at the right time, whether it is in a profit or a loss. Maybe they're traveling, they're occupied somewhere, and the movement in the options are so fast that ultimately they end up being into the negative or the loss side. Now, how to basically overcome this? Okay, so yes, we have heard that there are many kind of market participants in the market. One is the retail, second is the institution, whether it is DII, FII, third is the proprietary or client. So client is the retail and the proprietary, and we've heard of this uh, many a time at various source of media, that there is a lot of participations from the proprietary desk as well as institution desk on the algo side. Um, Thankfully, to the regulators, they have allowed the participation of the clientele side or the retail side as well through the proper source, that is a proper uh, brokerage house, or as well as a proper research backed exchange approved strategy through which the retail or the clientele uh, segment can also participate in this kind of a strategy. So we have come out with a strategy wherein it becomes so simple to basically participate in this kind of an instrument, that is an option which is highly risky instrument. Definitely, as a disclaimer, I would like to put that as a first thing. So, in order to participate in that without having much of human intervention, emotional intervention, where you can overcome all your biases, whether it is over trading bias, or maybe it may whether it is that the out of the money options may turn to in the money options, all of it. If you're not able to manage it yourself, we have tried to come out with a solution of it, which you can definitely have an experience of the same. And it happens on few clicks. So here I am there to present this product to you. I will just share my screen with you all. So I hope my screen is visible to all. Right. So here is the ICICI Direct website wherein we have this strategy. Okay, so I will take you through the strategy, friends. First of all, what do we do is on the ICICI Direct platform. So one needs to go to icicidirect.com. Okay, once you have logged in, okay, you will basically come across this thing. Okay, into which you go into FNO segment. There are a couple of ways to reach to this product. One is directly, if you can see this interface on your side as well. I mean, there are a couple of things out here, that is flash trade, breeze, spring, smart algos. So we go into automate trading strategies or automative strategies, that is spring, wherein you'll find these strategies. Another way reaching out this is, you go into FNO, you go into smart tools, right, friends? And within that smart tools, you have this algorithmic trading, in brackets spring. So we can go through that as well. And this is what you'll see on your screen, right? Here, if you see, friends, this session we have kept specially for the long only strategy. There are a couple of strategies which can be seen on my screen, but not on your screen, because we have been doing research and backtesting on many other strategies as well, friends. But you'll definitely be seeing long only strategy out there. It's clearly, highlighted new and research backed strategy. So let's deep dive into this strategy. So in order to do that, let's click on know more and know more about the strategy, right? Here we go. So as I already said, friends, that this is a highly risky strategy. Options by nature are high risk strategies. So one can consult their financial expert outside or within ICICI, can do the risk analysis or risk profiling of yourself and understand whether you can whether participate in this high risk strategy or not, because this is a high risk strategy, friends, right? This is an educational session which we have kept in order for us to make you understand what this product is, which we have launched recently. The minimum capital that is required for this strategy is rupees 1,80,000. And as I've already mentioned, the asset class is options, right? Now, friends, this strategy we have designed is on Nifty, the index options, and yes, it will work on the weekly, options. So, so we can take the benefit of the same as well. Now, this is a Nifty long only strategy. Long only means buying options, friends. Okay, so there are two kind of things in market as far as derivatives is concerned. One is long, one is short. Shorting options means you're writing options, wherein the margin requirement is as high as that of futures, right? This is a long only strategy wherein you buy the options, right, friends? You buy the options out here, uh, to make the benefit, or to make the maximum out of the momentum of the direction of the market. So suppose, for example, the markets are going up, the call options will be bought. If the markets are going down, the put options will be bought automatically, right? Friends, derivative is mainly for hedging as well. So yes, we have taken that into consideration as well in order to avoid the impact cost or maybe the slippages. Okay, so as for example, if the markets are going up and the algo buys the call options, then to hedge the same, it will buy the put option as well, right? Which call option, which put option, I'll come to that. But yes, if the direction is up and if the algo is buying call option, to hedge that position, it will buy the put option as well. And conversely, if the direction of the market is down and if there is a bearish signal which is read by the algo, it will buy the put option. And to hedge that position, friends, it will buy the call option as well. Yeah. So it's both buying call and buying put. It's not shorting, it's the long only strategy. How it happens, let's further deep dive into it. So if there is a momentum on the upside, as I said, friends, and if the algo signals a buy, the in the money call options will be bought. Which in the money call option to be bought, as in which strike to be bought, it will be decided by the algo, right? So there are a couple of things in the options. One is call option, one is put option. When you're bullish in the market, it's one buys call option. When one is bearish in the market, one buys put option, right? Now, along with that, there are three different segments as well. I mean, the different things as well in the options. One is called at the money option. Second is called out of the money option. And third is called in the money options. So for example, say if Nifty has closed at 23,155, right? So approximately, if you see, 23,150 is called at the money option, at the price, at the money option. Anything for the call option, I'm saying anything below 23,150, any strike below it is called in the money option because you are already in the money, right? And anything above 23,150, it is called out of the money options. The probability of out of the money options going into the profit is generally lower, as the out of the money options or the at the money options, what they have into the premium is just the time value, which is called as theta, which keeps decaying every minute if the prices are going against the direction, right? In the money premiums or in the money options by the premium has some intrinsic value into it as well, along with the theta. Hence, the probability of making money out there is high, right? The probability of making money out there is higher, right? So, coming back to the strategy, if the algo signals a bullish momentum, then it will be buying in the money option or in the money call option. And to hedge the same, it will be buying out of the money put option. Okay. So at 23,150, if the algo signals a directional uptrend, then probably 23,100, 23,050, or 23,000 call option will be what the in the money call option will be what as per the logic defined by us by the research already, which is predefined. So the algo will signal to buy that particular strike in the money option, right? Now to hedge this position of a call option, it will buy the out of the money option. So for example, if it has bought 23,100 call, it will buy either 23,100 put option or a 23,100 put option or maybe 23,050 put option. Okay, that is called out of the money option, right? Conversely, let's understand if the market or the algo signals a downtrend. So at 23,155, if there is a downward signal or a bearish signal sensed by the algo, as per the predefined logic put up by us, which we have backtested for almost 3 to 4 years, and after having understood the higher probability of it going right, we have taken the exchange approval and posted or made this strategy live for you all, for the clients of ICICI Direct, right? So at 23,155, if the algo signals a downtrend, then probably in the money put option will be what? That could be 23,200, for example, right? And to hedge the same, maybe 23,250 call option is also right. So for each in the money put options that's bought as per the signal, and out of the money option is also bought in order to hedge the directional strategy, right? In a day, not more than five such options will be bought in one direction. So for example, if the markets have signaled an uptrend, okay, if the signal goes wrong, there will be a stop loss and the algo will exit the strategy or the positions automatically. Then there is no position. Then if there is again a bullish signal, it will again buy a call option. It will hedge it as well. Again, it can go wrong or it can go right. And after some time, suppose if it exits, there is no position. Again, market signals a bullish momentum. There will again be a call option. So likewise, there cannot be more than five such positions taken in the call option directionally. Okay. Conversely, there cannot be more than 5 directional put side positions are also taken in a day. So maximum directional positions that are taken in a day are not more than 10. And to bifurcate it, it will be 5 on the call side, 5 on the put side. And likewise, at each time when these directional positions are taken, either on the call or put side, okay, to hedge the same, the opposite position is taken on the put or a call side respectively. So net put together, there will not be more than 20 positions, which we have mentioned. There will not be more than 20 positions taken in a day. At a given point of time, there will be not more than 2 positions open, right? Because you have a directional position either on a call or put side and a subsequent hedge positions against it as well. So not more than 2 position open at a single point of time and not more than 20 positions, including the hedge at a in a day, right? To further understand, not more than 5 positions on the call side and not more than 5 position on the put side. So the re-entry condition is just 4 times in a day, either on the call side, both on the call side and put side. So not more than 4 re-entries to be taken. Right, friends? The margin requirement or the capital requirement for this strategy, we have already mentioned, is rupees 1,80,000 rupees. This why 1,80,000? That could be a question which I'll take up, but then I will explain this also that since you are buying in the money, the premiums are higher. The lot size have gone up from 25 to 75 in Nifty. So that along with that, to hedge the position, you again taken out of the money option. So maybe you require around 40,000-50,000 required capital to take a position at a one go. Also, there can be a drawdown some point of time. I mean, the strategy can be making losses in one day or maybe 7 days in a row. It can happen so. So that amount, considering that as well, you keep that buffer margin. Of course, the transactional cost, okay, which are the transaction charges by the exchanges, the stamp duty, the STTs, the brokerages, everything. So if you have kept 1,80,000 in your account for this particular strategy, and if you run it for a year, the probability of requiring more amount beyond 1,80,000 is very less. Right, friends? So once put in, you need not bother much about it. Right? Now, if the capital goes above 1,80,000, and whether if you want to withdraw it, you can definitely withdraw it. So, for example, if the strategy has or the capital or the amount in your account has gone from 180 to 185, if the strategy has gone favorable, okay, by 5,000 or something, if you want to wish to withdraw 5,000, you can. It is all up to you. If you wish to withdraw 80,000 as well, if you want to stop this strategy any given point of time, you can do. There is no such compulsion for the strategy. It is just a suggestion from our side that if you run it for 252 days, probably you can have the desired results, right? That's how it is. Anything if you run for at least a year can be favorable if it is done on and off, okay, at regular intervals. It may or may not give the desired results in the markets, right? So we would recommend or advise rather to run it for a year, at least to have a good experience of it. That is what we suggest, right? This strategy is live for all the ICICI Direct clients. As I have shown the path, you can go there and make it live before 9:20. Why? Because as per the algo, the strategy goes live by 9:20. So the algo starts finding the signals in the market from 9:20 onwards. So if you have logged into this strategy and made it live traded before 9:20, your algo will start, you know, getting the signals at your end and start executing the orders well in time. So 9:20 is the start time of the strategy. It's an intraday strategy, friends. So all the positions which are open gets automatically squared off by 3:15. There are no positions open after 3:15. You can go and check if at all. If you find it, you can obviously connect to your respective relationship manager to understand it. But as far as we know, it won't. But in order, just to be confirmed about it, you can always check after 3:15, right, at your end as well. Okay, there are obviously predefined stop loss, which have been put in into the system. So there is a proper risk management of the same as well. Now, if the strategy is going well into the favor as in if the algo has bought a call option and if it is going in the money, then there is a trail stop loss mechanism added to it as well, so that the probability of ending up in the money is always there. Okay, so that is what is the features of this strategy. I have already mentioned one thing, that for each ITM long trade, whether on the call or a put side, there is an OTM trade which is also taken on the long side in order to hedge that position and also to avoid the slippages or the impact cost. Right? At a given point of time, there are not more than one lots taken. So this requirement of the minimum capital is as per the one lot each for the directional trade as well as for the hedge trade. If someone wants to basically trade in more number of lots, then we would recommend or advise to have the minimum capital requirement accordingly. Okay, that is our suggestion and advice, that if for one lot it is 1,80,000 requirement, then for two lots probably you require 360, right? And for four lots you require 720, and so on and so forth. Right, friends? So this is what the strategy is all about. How do you trade it? There is a button called trade out here. This you will not see. This is for us for paper trading and all. You just go and trade. Right now, it will not trade any trade because markets are closed. It's just simply log in, go to FNO segment. Within that FNO segment, go to Smart Tools, Algorithm Trading, long only strategy, and just click on this trade button, and it's done. Here it is already mentioned the market is currently closed, so please try it again. So tomorrow, if someone wants to start doing this, one can start from 8:45 to between 8:45 9:20. One can go and make it live trade, and from 9:20 the system will automatically take the signals of the algo and start executing the orders. Okay, there is one more feature of a back test into it. So you go to the smart tools, you go to algorithm trading into the spring. As I've said, it's a long only strategy, it's a research backed strategy, it's new strategy, exchange approved strategy. In that, no more. I've explained you everything. You can again go and check it at your end as well. Out there, there is a feature of a backtest as well, friends. So in order to do the backtest, for example, say if I want to do it a backtest from say June, you can do it from Jan as well. If I do want to do it from June 1st until today, that's 6.5 months approximately. Then I just run a backtest on a one lot, and run a quick backtest. And here you see the backtest has already started, right? It's already started performing. It goes day wise. So just keep moving. Here you see on the screen there is a drawdown thing as well. Drawdown means from the peak, how much has the strategy gone into loss as well. So one needs to keep in mind as well. As far as we know, the drawdown can be as high as 25-30% as well of the capital. Okay, and any strategy, friends, can go into loss. But we have tried our best from our side, doing a good research, that the strategy ends up favorable if done for 252 days, right? So this is how you can run the backtest at your end as well and see how the strategy is performing. From June 1 is what we have started, and it has already entered into mid of July, and it's a negative, right? Friends, it's a negative. We still wait and see what happens as it does more of backtesting. So by July end, where it's nearing right now, it's 4.5% positive. It might go into negative again. It can go into positive again. The drawdown so far has been -7%, right? The pink line here is the benchmark, that is the Nifty. The blue line is the performance of this strategy, right? As it's now moved into August mid, and here you see or the back testing is going on, right? So it's around 4.5%. We have done this kind of back test in the past as well. I had run it just before the session, right? So you can check that as well. So I can just stop it here. So at any given point of time, if you want to stop the back test, you can stop the back test as well, right? So that's how we can done this. If I were to run this back test from 1st October, I can run the back test from 1st October. It's running. If you see out here, so if I want to run it from 1st October, I can run it. And here you go and see from 1st October how it is performing. So it's there on your screen, friends. You can do it on your own as well. You can go and check. If you find this favorable, you can definitely experience this on our platform. This especially we have designed it for you all for the ICICI direct lines. And there are many other such strategies in pipeline which will be coming out very soon as well. As and when we receive the approval from the exchanges, from the compliance point of view as well. This is one strategy which we have made it live, which you can experience right from tomorrow or whenever you want to, right? Now, until from October, if you see, it went into negative. Suddenly it's positive. Generally, long options, friends, by the nature of it, have a low strike rate. You need to understand that. Say, I'll give you an example, okay? Or maybe a situation. There are three kind of trends in the market, that is bullish, bearish, and sideways, right? So suppose if you're a buyer of a call option, okay, what is the probability of you going right? Since there are three kind of trends, you making money if you got a call option will be only there if the market goes up. If it remains sideways or if it goes down, you end up making loss. Okay. So the probability is 1 by 3, that is 33%. Likewise, on the put side, if you are bearish on the market, you buy a put option. But if market goes up or remains sideways, you end up making loss. So if you're buying put options as well, the probability of success is 1 by 3, that is 33%. So by the nature of the options or the long options, the nature itself is like the probability of success is 1/3. So out of this 252 days, if we go just by the simple calculations, the probability of success could be as much as 100 positive days and 150 negative days. But what's more important is that those 100 positive days total is more than the negative 150 days. And that is what we have tried at our end, that these 100 positive days, which one it would be, even I don't know. It could be any. But if continued for 252 days, these 100 days put together, the probability of success or the total positive returns will be higher than minus 52 days. It can not be that as well. It can be reverse as well, that these total of 100 days is negative than that of minus 152 days. Yeah, it can be lower than that, and all put together can be further negative. So 152 are negative, 100 are also negative. That can also possible, but we have tried at our end in order to design the strategy in a way that these 100 days, okay, these are approximate numbers, friends. Don't quote me on this. These 100 days are by average or by in total higher than minus 152 days approximately. Yeah, these are approximate numbers. Don't take it as it is. So one has to be very, you know, uh, one has to be prepared when doing this kind of strategies. It's all good. So once you have done it, you can focus on other work of your life in your life. Focus on other investment things which you do in your life, and just leave it to the algo to decide what to buy and what to sell automatically. Many people have this tendency of stopping the strategy in between if they see some good returns, and then start it again, then stop it and start it again. So it goes as like, trading the algo. Algo is designed for you to not do over trading, not do indisciplined trading, and have control over your emotions. Now, if someone tries to basically trade the algo that start before 9:20, see some positive, stop it, start again after 1 hour, again stop it, start again after 1 hour. Now, that's not a good practice. If you do it, that's at your discretion, but it is not recommended either for algo or maybe if you're doing any sort of trading. That's again over trading. And algo is designed in order to have control over your emotion. If one doesn't have that and keep trading algos as well, the purpose of the algo, it dies. So that's how it is, friends. See, the backtesting has happened, and so far we have seen it's positive 8.29%. It had gone to -7% as well. So that's how it is. The Sharp ratio for this last 3.5 months has been 1.15. Generally, a Sharp ratio above 1 is considered to be positive, right? So that's what the strategy is all about, friends. I would again tell you that how it goes is when you come to ICICI Direct platform, you go to this FNO segment. Within that, you go to the smart tools. It's very clearly mentioned out here. Algorithmic trading spring. Going to that, here's the strategy, long only strategy, which is research back, exchange approved. We've taken a lot of backtesting into already considering into that only we have made this live after testing it at our end as well for a couple of months. You can go to know more, understand the strategy more in detail. If you have any doubts, you can anytime come to our team and understand this again. Go through this video again. Any doubts, you can always get it solved through your RM. You can thereafter trade the strategy, live trade, right? If you want to backtest at your end, you can definitely go and backtest at your end by clicking on no more. And there you have this backtesting feature. You can definitely backtest at your end. After understanding and knowing this only, you can start this. There is already a disclaimer that please note these strategies are made for educational purpose and not to be construed as a recommendation. Backtesting is a hypothetical results generated based on the condition used on historical data, right, friends? And that do not represent the actual returns or future returns as well. So that's a disclaimer from our side as well. We've tried our best to come out with this kind of a strategy, and we'll try our best going forward as well to keep coming out with these kind of strategies and products for you, friends. Uh, that is all from my side. I will stop sharing from my side, and we can take up the Q&A if any.
Yeah, Jay sir, thank you so much for this session. Few questions are there.
Sure, we can take that up.
Okay. What is the rough gain percentage in the strategy? First question.
Friends, see, I would like to say that you can definitely backtest this strategy. Okay, how to backtest this strategy? I will again share my screen and tell you that you go to this FNO segment, go to smart tools, go to algorithmic trading spring. There you find this long only strategy, no more. You can go and backtest and understand what is the profitability or maybe the positivity or the returns or whatever you want to. This can, because I will also reply based on this only. Okay, that this is what the probable returns could be. And as again I have said the disclaimer that is based on the historical data and they do not represent the actual or the future returns. So you can check this very well at your end, friend, from the time period you want to. Yeah, Jignesh.
Okay. Now the second question. What are the ICICI direct charges for this? Is there any charges for using the software?
We are not charging anything extra for subscribing or making the strategy live at your end. Whatever transaction cost or whatever the brokerage cost which you already been charged, that is there, but there is no additional charge for making the strategy live.
Okay. Now, whether we can make our own strategy. So I will,
Sure,
yeah.
sure, friend.
So
You can,
yeah,
in this algorithmic trading, if you see there is Breeze API, you can definitely explore this, how to use the Breeze API, and how to basically create strategy at your own end as well. But with the research discussion paper at the by the regulators as well, you need to be registering and taking the approval from the exchange for your particular strategy as well. And in order to know more about it, you can definitely contact Jignesh and team.
yeah. I will add more things on this. Suppose if you have any question, any queries after this session, you can write us on the spring@ICICI Direct, right? .com. You just write a mail, whatever your concern, whatever your query. Our team is there to help you out. Now I'm taking another question, sir. Is backtesting gives the transaction cost, everything it will cover in the backtest?
Yeah, so see, the backtesting results which are shown are on the gross basis and not on the net basis. Okay. Of course, it has taken into consideration the slippages, the impact cost, but not the transaction cost.
Okay. Now one more question. Can we download the transaction report which backtested given the trades? Can we download the trade detail? Yes, you can download from the full backtest.
So when you go to Spring and when you do algorithmic trading, okay, when you're backtesting this, right? So let me see whether there's a this is completed. So this is a completed strategy. Okay, you can download. So that's how you do it, right?
Yes. Yes, yes. Even also you can do the full back test where you can see the Excel download. Each and every transaction you can just monitor on Excel if you want.
These names which you see, friends, are random, taken by the system.
Yeah. 1 second. Should we need to initiate every day to start the strategy?
That is what we suggest, friend. That yes, if you do anything like this on a consistent basis, doing anything, see anything, if you are, so for example, a sport, if you practice consistently, then probably performing better at a high rate is always there, right? So my suggestion is to at least do this consistently for a year in order to experience this strategy properly, that how well this strategy has played out for this entire year, wherein all the trends of the market, whether it is sideways, whether it is up cycle, down cycle, sideways cycle, higher volatility, lower volatility, everything will be experienced and covered into that 1 year period. If someone does it on their own gut feeling that today is my day and I want to try this, may not work. That's again called a bias, right? So I would say that this strategy is designed to overcome your biases. Hence, consistently doing this and let the strategy work on its own for at least 252 days, which captures 1 year, 252 trading sessions, I would say. Not days, but 252 trading sessions. I think that's a good time to experience and to know about the strategy's success.
Okay. Sir, is this strategy working on expiry day also?
It works every day.
Okay.
It works every day. It will work on the current weekly expiry contracts. Once that is over, it will work on the next weekly expiry contracts. It's not working on the monthly expiry contracts.
Is there any strategy based on the expiry day?
Yes, friend, there is a strategy which is there based on the expiry day as well. I did not cover that today much, but since your question has come, I can throw some light into it as well. There is a strategy which is tradable on every Thursday, and that's on Nifty expiry day. It's an expiry day strategy. This is not long only strategy. This is a short option strategy. Okay. You can know more about it. You can read more into it. And the margin requirement for the same is also different. Okay. So you can backtest that as well. You can trade that as well. That's specially designed for trading Nifty expiry day every week. Okay, but since this is a session for long only strategy only, I did not explain that much into it detail. But you can explore it on your own as well. And if you have any query, you can definitely reach out to us.
Sir, last question. What will be the brokerage applicable if I trade using this algorithmic product?
I think whatever brokerage slab you fall into, the same brokerage is what will be charged, friends. So is there? There's no further or additional charges. It all remains same.
Okay, I think we have covered almost all the questions. There are some repetitive questions I'm not asking. Still, if you are facing any query, any questions, so you can write us on the spring@icici direct.com. We are ready to help you out. We are always eager to help you out. Please write us on the spring@icici direct. Thank you, Jay sir. Thank you everyone for joining
Thank
this
you,
session.
everyone. Thank you, and friends. I hope that this session has been quite has benefited you, and I hope and pray that you have a positive year ahead as well, 2025, and keep trading with ICICI Direct, and we will come out with this most such strategies, and we'll keep or arrange this kind of sessions even more. Thank you so much for joining.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.